Hello and welcome to another update video about AVAX. The AVAX chart continues to be in this trend channel, in this corrective trend channel that we already discussed in the last few videos. Let's start at the bigger picture. Let's look at the daily chart here. The assumption is that we're dealing here with a currently some kind of a corrective rally. It could turn into something like a diagonal. It would be a very unlikely move though, but it can always happen. Bottom line is it takes a break above $86, a sustained break, to open the door to new all-time highs. Okay, until then I see this simply as a corrective rally in an A wave, which consists of a flat structure in an ABC structure, then a B wave, which hasn't started yet, and a C wave, which should be a 5-wave move. So there is still definitely potential for higher prices. We will get clarity about that in the first deeper pullback, which should be that B wave. Okay, once that happens, and if it's a corrective pullback, then this would set up the price for a rally deeper into the red resistance zone, which is between $29 and $86. It's a large area, yes, but what we know is that typically, and we can only talk about ideal structures, typically the A wave, which is this first 3-wave move. An A wave typically reaches the A wave of the wave 2, typically reaches the 38.2 retracement. That is at around $29 to $30. There are several levels that point towards that, or several factors, several aspects really that point towards that level. We have structural resistance, we have Fibonacci resistance. Yesterday I showed you how to calculate a Fibonacci extension that points towards that level. So there's a lot going on there around the $29 to $30 level. So there is some confluence there. Sometimes an A wave also moves to the 50% Fib level. That would be at $40. So that's sort of something that we need to consider, that the price might, in this current A wave, so A, B, C in the A wave, and the C wave might still get a few more squiggles higher. And therefore we pay attention to the area around $29 to $40. But I also tell you which level is the key level support-wise. If that level breaks, we're already likely in the B wave, okay? So at the moment, A wave likely in the making, then the B wave pullback. If it's a corrective pullback that forms a higher low and respects certain support levels, then we can watch for a C wave that might then take us to roundabout maybe $55, $86. But that really depends on how high does the A wave go and how deep does the B wave pull back. So let's zoom in. And now if we go to the 4-hour chart, here you can see that the move up looks quite aggressive, but I don't see it as an impulse. It just doesn't really respect certain Fib levels, and also structurally there are too many overlaps in there. So I rather count that as a diagonal, which is why I count the wave 5 as an ABC structure. So currently looks to me as if we are in the B wave of wave 5. That assumption is valid as long as we're holding above $15.62, the wave 4 low, and it's likely as long as we're holding above $17.15. A break below that level will make this very unlikely, this assumption, because that's the critical support. The price already reacted once to the support area. It seems like because that the rally that happened into Friday's highs is nearly already completely retraced. So it seems currently likely that we might test the box again, maybe even go a little lower here to the 1855 level. And it could be, and that's what many coins seem to be doing at the moment, that this B wave is unfolding as a WXY structure. So W, X, Y, and the Y wave is currently in the making, and the Y wave itself is an A, B, C structure. And I would pay attention to $18.55, as well as around about $17.15 for support. And as long as these levels are holding, a 5th wave to the upside is possible and likely. We are dealing here with something that you might consider a bullish flag. Looks a bit like that. You also need to understand that we are just below structural resistance. This level that I put onto the chart already before we reached it. I mean, you could say, okay, we are currently slow here, so it's resistance, but DTA revealed that this is likely going to be an area where we get rejected or face some difficulties, which is why I shared it with you already weeks ago. Yeah, this is a structural resistance area with all these previous peaks, okay, that define this area. We had a fake out, but besides that, it always was respected here. At least, well, not always, but since May 22. So it's quite a difficult one to get above. But yeah, as soon as we break above the 20s, what high was it? The 20, no, the 1 second. As soon as we break above the high that was made on the 17th of November, we can watch for the $29 level as next target. So essentially, I would still anticipate one more leg up, but certain support levels need to be holding for that. If those support, the micro support levels that are shared with you, if they break, then I think we have to understand that we are most likely at least in a B wave. And if the move down is then corrective, and I will put another support area on the chart once we see that as likely. If the pullback is corrective, then we can watch for a C wave rally after that. That's my update about AVAX. I hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Also make sure that you follow us on Instagram and Twitter. You can find the links for those in the video description. Thanks a lot for watching. Bye-bye.